welcome everybody to the very first panel Q&A by Trust Your Talent Academy. Today is January 28th, 2023. So for those of you who are new to Trust Your Talent and you know that we actually put out quite a bit of content out there, especially when it comes to financial education through strategic real estate investing. So what we really want to accomplish during these panel Q&As is just open ourselves up to answering questions that you may have. Maybe sometimes it'll turn into a bit of a mastermind session because you don't have to be a newbie. You don't have to be somebody that has never had any experience in real estate investing to join in on these panel Q&As. Sometimes we might actually get people that are a bit more seasoned in the investing area. It doesn't even have to be just real estate either. So we are just looking forward to having very productive, very value add conversations with everybody that show up to these panel Q&As that we're doing. And just so you know, you are able to submit questions when you are registering for these sessions, or you can simply DM us via Instagram, or via LinkedIn, via YouTube, via Facebook also. And these will be trimmed up and cleaned up as recordings, and we're gonna be putting it on our various social media platforms as well. So if you're not able to actually make it to the real-time sessions, you're not gonna be feeling like you're missing out. So for those of you who might have FOMO, this is good news for you as well. And want to let you know that the panel Q&A will happen on a monthly basis, and you should be able to find when it's happening via our social media platform and also Eventbrite. Okay, so with that said, today we're gonna kick it off with a topic called how to grow and scale in 2023. And your featured panelist today will be, and as I'm calling everybody's name, if you can give everybody a quick wave or use your emoji, that'll be great, from the Trust Your Talent training team. So first and foremost, I always say ladies first. So Brooke Shang, we have Brooke here joining us. Brooke teaches creative financing and real estate investing financing fundamentals here at Trust Your Talent. She is also a published award-winning author, also a real estate investing mentor. And next, we have Mr. Ryan Carr. Give us a wave. There we go. So Ryan teaches business fundamentals. And so many people that want to get into real estate investing tend to overlook the importance of understanding the fundamentals of how businesses work. Meaning, aside from looking at deals, getting deals, maybe acquiring properties, in this case, you need to understand how to actually run it like a business, meaning you got to know how to put together a business plan, a business budget on an annual basis, because we always say those who fail to plan to fail, and you don't want that to happen. And in addition to that, we always say OPM, 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 because you may not have all the resources in the world that you need right now to scale your portfolio. And this is why it doesn't matter if you're newbie or experienced. In order for you to grow and scale, OPM is at some point inevitable. And that's all included in how you can actually network to the best of your ability so that you can leverage the education, the experience that you have to go out and source other people's money. And that being said though, Ryan also teaches income properties, multi-unit residential. So for those of you who want to get into multifamily investing, he's your guy also. And really, I'm gonna say last but not least on Ryan, I think the rap sheet just continues, hey? He is an award-winning mentor with Trust Your Talent, having helped multiple students declare financial freedom and financial independence in just 2 short years. Actually, your first record is what, 7 months, Ryan?
7 months, yeah. They made some hard decisions, but yeah.
That is insane. So next, we're gonna welcome Mr. Jeffrey Lee. Give us a wave.
Good morning, everyone.
Hello, Jeffrey. So Jeffrey teaches at Trust Your Talent real estate investing fundamentals and distressed properties. And that is the reason why we call it a fundamental course as well, simply because of the fact that we are all choosing real estate as our vehicle to create multiple sources of income and wealth. And what that really means is that 90% of the time, depending on your strategy, 90% of the times, we are having what we call a property first approach. So when you go to Jeffrey's course and take real estate investing fundamentals, you will be exposed to really how to find a distressed property the most effective way possible, how to conduct market due diligence so that your numbers are actually as accurate as possible. You're going to be walked through the BRRRR process, which has become a very, very well-known term in the real estate investing world. And that's all in real estate investing fundamentals and distressed properties with Jeffrey. With that said, though, Jeffrey right here is also an award-winning mentor with Trust Your Talent. He has helped numerous students declare financial independence and financial freedom over the last few years too. So if you want to get to know Jeffrey better, you better stay on and continue the conversation with him as well. And as you can see, we actually have a few more team members from Trust Your Talent Academy this morning. We basically just enjoy sharing our experiences, our knowledge. And here is a huge, huge disclaimer for you. Aside from the fact that our lawyers are always happier when we do that, at the same time, though, we do want to share a couple of things with you. Number one, we are all here putting our investors' hats on to share our experiences. And so what that means is when we come to you and share our stories and our journey and maybe even case studies based on the questions that you're asking, it means that we are speaking as real estate investors, not accountants, not lawyers, not realtors, not mortgage brokers. We want to really show you what it's like to be a professional real estate investor. And with that said, the second point that I want to share with you is even more important, is simply because the fact that we are here to show you how you can pull it together as a business. Okay, so that's really what the main point is in terms of what we're doing here. And so with that said, we did have a couple of questions that came in earlier. So what I'm going to do now is I'm just going to open up today's session by asking everybody, and this is your chance to really exercise your emoji button on Zoom right now, okay? Really exercise your emoji button on Zoom right now, or if you're feeling like you want to speak up, feel free to unmute yourselves when we prompt you. First thing first, by a show of hands, who here is feeling slightly uneasy or maybe even fearful with the current market situation? We got one hand. I'm going to put my hand up too, slightly. Absolutely. Is fear ever going to go away? No. However, it's about how we actually see things. And that's why today's session is going to do just that. Fear is a feeling. However, educated investors, we leverage knowledge and strategies and proper processes and systems to help us minimize and even eradicate those fears. Okay. And if you are into personal development, you may have heard of a person by the name of Tony Robbins. And I learned this phrase years and years ago from Tony, where he said, basically, fears and excitement create the exact same chemicals in our bodies. So when you have those butterflies in your stomach, all you got to make sure is that the butterflies are not all over the place. Tame yourself by getting yourself properly educated, do your due diligence, run your numbers properly, which I'll segue into a quick seminar that we're doing on Tuesday, is to make sure that your butterflies fly in formation. Is that clear with everybody? Make sure your butterflies are flying in formation. That is what we're doing here as educated investors. Okay. We don't have a crystal ball. We don't get to change government policies, nor lending rules, nor even what the big blue bank with a golden lion wants to do when it comes to lending. However, we know what we can do to take calculated risks with every single deal we go into. And so, with that said, who here understands that as a real estate investor, rent is our main revenue stream? By a show of hands. Okay, all the hands should go up. It's a coffee chat, by the way. Just want you to be a bit more interactive. I know it's a Saturday morning, so kudos to everybody that's here. And so, with that said, I want to share with you, especially for those of us who are in Canada. I'm not quite sure if we have people from other parts of the world today yet, because a lot of the times we do on the Trust Your Talent platforms. And so, I want to share some, I would say, maybe good news with everyone. Okay. The Stories website said that the average rent price went up by 11% in 2022. Rates are going up. Interest rates are going up. Values are declining. It's getting harder and harder to pay for the day to day because inflation's also gone up. And yet another news article also came out. This is BBC. Average rents in Canada soar above 2,000 for the first time ever. I want you to think about that. First time ever in Canadian history, average rents. Okay. I know some of you are probably going to get a little smart with me right now. You may be investing or living in a market where average rents are lower than that. That's fine. We're talking about a national average right now. Next article says rentals.ca rent report. Okay. It increased by 12.2%. You can already see that not all media agree with each other in terms of the numbers they're putting out. Last but not least, Financial Post, which is regarded as one of the most trustworthy news sources here in Canada, and rent increased by 10.9. So I'm just going to say this, as an investor, and everybody on the panel, feel free to speak up at this point too. It doesn't matter to me exactly who's saying what percentage. What is the general message here? My general message is that rent's going up. Is that simple enough for everyone? Yeah? And do we all agree on that that's the conclusion? And so ask a real estate investor, if the main source of income is always rent first, is that good news to everyone? Yes or yes? Okay. So let's start to put things into perspective here. And I see Ryan would like to join in the discussion.
Yeah, if I can add, I mean, obviously it is certainly our number one source of income. There are others, that we talk about in the courses as well. But I will say this is also where, and believe we're going to talk a little bit about Power Team at some point as well. It's where our Power Team is crucial, right? Many of us here, both students and instructors, are investing outside of our backyards. Even in your backyard, it's still crucial to have those people like the property managers, lawyers, accountants, because every individual province is going to have individual rental increase guidelines. And we need to know how to navigate those, right? So although the national average is what it is, depending on the property we're taking over and how well or poorly managed, likely poorly managed, and that's why it's being sold. Otherwise, if it was a cash cow, why would they be getting rid of it, right? We need to turn that around. So we need both the right strategies and the right people to help us navigate that. For example, in income properties, one of the resources you get is a rental increase guideline sheet with links to each province. In Saskatchewan, for example, it's tied to the Consumer Price Index, and there's this big, long, complicated calculation. Even to look at it, it makes your brain hurt. So you're going to need the right people to help you be able to navigate this and understand, yes, this is where market rents may be. This is where you currently are. And these are the steps we need to get there in between without causing any sort of trouble with landlord and tenant boards.
Thank you. So this is how I actually wanted to start this panel today because, like I said, we did receive a couple of questions. So now we're going to actually move over to the Q&A portion very quickly first, and then we can bounce back and forth. I mean, we always have something prepared because educated investors are always prepared for any situation because maybe there were not going to be enough questions from the audience. So we're always prepared regardless. We're going to kind of switch gear a little bit on that note. Okay. And so we actually got 3 different questions that came in before today's session. So I'm going to be posing this question out to the panelists right now. And I know Ray also joined us slightly late today, so he's here now. And so we will have Ryan, Jeffrey, Brooke as our panelist, and Ray. And then Andrew, you can chime in anytime too, or anybody on the Trust Your Talent team, or like I said, treat it as almost a mastermind session too. If you have something you want to share and say, go for it. All right, first question is this, panelists. How can I scale if I'm not getting cash flow right now because my poor little 2 properties, the little cash flow that I had already got eaten up by my mortgage payment because of the rising interest rate? So who's going to take it first? How can I scale if I'm already not getting cash flow? Brooke.
I think it's like doing any business. The utility always goes up and the property tax always go up. So it's nothing new that some other expenses could go up as well. And in terms of mortgage, what goes down will always go up. So it was just a matter of time when the interest rate will go up. And the good thing is we already seen the market cooling down. So back in the early 2022, people were complaining about not being able to secure a property because there were multiple offers. So look at it from the other perspective. Yes, we always pivot, and expenses is going up no matter how the market goes. That's kind of expected as well. So yes, there's always opportunity, like what Tim mentioned earlier, rent will increase. So if you look at opportunities, what are we going to do when mortgage rate goes up? A couple things I will look at is, yes, there are more opportunity in terms of some owners are hurting, more opportunities for creative financing, vendor take back, or you can secure a property at a lower price in a lot of market I've been looking at. So in the future, another thing you can do, so a couple things I would recommend. So first, look at the upside. Yes, some properties, make sure you increase the rent legally and annually. For example, where I am in Ontario, I do invest in other provinces as well. However, in Ontario, for example, do your due diligence. Always give them 3 months in advance of rent increase legally. And second, look at what opportunities there are. Yes, creative financing. And third, if we expect everything going up, eventually comes down, even if your cash flow is squeezed at the moment, you can sustain it as long as there is positive cash flow. So yes, there's sometimes $200 become $80, $100. However, in the future, if like the market shows us, whatever goes up goes down, in the future, you could possibly refinance when the interest rate goes down again. So your cost could possibly be improved in the future. So nothing different than what we're doing now. We just pivot according to how the market goes.
Thanks, Brooke. And I know Ryan put his hand up too. Oh,
yes,
not able to hear
I
you
unmuted
yet,
myself. I apologize. There we go. So I guess, historically speaking, if we look at it, some of us may have been talking to our parents, these interest rates are still low. Yes, shocking for some of us that might be newer to the game. But I'll say it, frankly, in the last few years, the bull market that we had, a monkey could have made money. Let's be honest. So this is where the wheat is separated from the chaff, so to speak, or the cream rises from the top, if we're using analogies or whatever we want to call it. And that's why it's super important that you're here, you're investing in yourself, you're gaining that knowledge, because that's what it's going to make you an educated investor versus a property collector, right? During these high times that just passed, anybody in any major metropolitan area, GTA, Greater Van, etc., they just wanted to take equity out of their house and overpay for a property so they could tell their family and friends, I've got an investment property. And that's what it was, right? But a lot of times they weren't cash flowing even at that time. So I mean, to continue to scale, concepts that you'll learn, you shouldn't be using your own money anyway, right? So if you are a little bit tight, money will always follow good deals, right? Chewy, one of our other coaches, said that. And it's so true. I mean, I know it's for you to be new and to be hearing that now. I remember it as well when I heard it back in the day. Yeah, won't that be nice? But it's so true. Money will follow good deals. So treat every business treat every property like its own business. No business is sustainable without cash flow, right? So it's got a cash flow. And whether that is taking on creative financing, like Brooke said, there are a lot of owners right now that are feeling the heat, and especially with the last little bump, that quarter point, that might just be the straw that breaks the camel's back, right? So whether you yourself are liquid or you have access to funds, get into the courses, absorb that information, and you'll know the concepts to be able to approach someone. Because if you have a tired landlord that's been bleeding for months now, you could have the ability to swoop in. They may very well hold financing, because you can put it to them that way. Hey, you still get to enjoy the concept of making money through investing, but now you're letting go of all the headaches. I take care of the property. I take care of the tenants. I will improve the property, and I'll send you money every month. You just hold the financing for me, right? And for the properties that you may have, for example, I was caught as well with my pants down a bit. I won't lie. I think it's important to be transparent. We had a property that was cash flowing very well for us. It was on a variable rate because it's a bit of a turnaround. We didn't lock in when we maybe should have. And so our mortgage went up significantly. It's over $4,000 a month now on a duplex in Kitchener. And we said, okay, how do we make this work? Well, we should always have multiple exit strategies for each property. So now we had 3 graduate students in the upper floor. They've gone because they finished their diploma. We turned it into an Airbnb, and we're back to cash flow positive. Yes, okay, it took a capital outlay of about $6,000 to furnish the place. We already had some stuff, but money well invested, because we'll recoup that very quickly, and it's a business expense.
Awesome. Thanks, Ryan. And Jeffrey.
Thank you, Tim. And I just want to have some notes added based on what Brooke and Ryan have given us. In terms of this question, I just want every one of us to think about, when you, using the example, when you apply a mortgage, the lenders would like to stress test you. This is the same thing we want to know when we analyze a deal, everything from the beginning. So it's the same thing for every investment you want to make. You also want to stress test in the beginning, such as the interest rate. Yeah, like Ryan said, yeah, it's still low, but comparing the beginning of last year, it has been very high. It just depends. But you should stress test your deals, your investment opportunities with even higher interest rate in the beginning. And Brooke also mentioned, like, the expenses, no matter what, eventually it will go up. And I know a lot of us in this room, especially some of them like who have been with TYT for a while, some of us are investing in New Brunswick. I just want to use New Brunswick as an example. In New Brunswick, the property tax is different if this property is owner occupied or non-owner occupied. And let's say you are buying a property from a owner occupied one, and the property tax right now is, I'm just using a simple number, $2,000. When you take over, when you receive your tax bill, it could be doubled. So you literally just need to use the actual number you will see in the end, like down the road, to stress test your properties. So as long as you structure the deals properly in the beginning, that will significantly reduce the chance that, yeah, you will see surprises down the road. It's not going to be cash flow, everything like that. Yeah, just have a quick note on that. Thank you.
Thanks, Jeffrey. And I'm actually going to jump in quickly. And this is something that I've been sharing for a while now, actually, especially with the rate increase a couple of days ago now again. It's really interesting because I feel like people have told me that we don't share our own journey enough, even though I feel like I've been very transparent. I sometimes go back to some of the back recordings that I've done, and I'm like, I'm giving away the farm here. And so what I really want to share is in the last 12 months alone, funny enough, with the last rate hike, our portfolio actually cash flow wise has gone down by just shy of $12,000 a month. I know it's not a number that anybody wants to hear. And I know it's not a happy number even for us, and it's a lot. And for many people, it's almost like, hang on a second, that's the number I need for my ultimate financial freedom. And your portfolio shrunk by that much. And the answer is yes. However, the whole point that I really want to make with every single person is this is why we keep teaching and sharing about how important it is to scale, to have OPM, to go into different markets. 3 strategies in 3 different markets now is needed, not just recommended. Before COVID times, before interest rate, before inflation started going up, we were always saying 2 by 2. So 2 strategies in 2 markets to hedge against your own risk. And now it's even more important that we do that because you never know what the market is going to do. And the thing is, unlike amateur investors, trained investors, typically what that means initially is that you're trained with more strategies, more tools under your tool belt, so that you're not just doing buy, rent, and pray. You have different tools that you can apply in different market conditions. However, by spreading out your portfolio in at least 3 different markets and 3 different strategies, you can be fairly well protected. And am I unhappy with that shrinkage, so to speak? Absolutely. I mean, it's fun vacation, once a year. I mean, we take fun vacations. And the other thing is you got to start to think about how you fill what we always call the wheel of wealth at TYT here. Right? So within the wheel of wealth, you have your earned income bucket, you have your passive income bucket, and then you have your portfolio income bucket. And I've also always said that properties are like people. The older we get, the costlier it is to maintain us and the less we perform. Hate that saying sometimes. However, it is the reality and the facts of life. So what that really means is we've never, ever been anybody that will say, you know what, go and collect 5, 10 properties and keep it for the next 20, 30 years so that all you got to do is pass it down and the property is free and clear. First of all, wealth is measured by time. And we also want to say wealth ultimately is measured by financial education, meaning do you understand how money works and leveraging the vehicle, the investment vehicle that will help you sustain that wealth. And so it's really interesting in terms of what's happening right now. I'm kind of thinking because I mean, I became an accidental landlord in 2009. And some of you know that I originally lived in Burnaby, BC, and now I call Edmonton, Alberta home. And so what that really means is that condo that I lived in Burnaby, I actually bought it in the worst way possible. However, I'm just going to justify it by saying it was a principal residence and I didn't know any better. You don't know what you don't know until you know. And so in 2004, I was one of those people that lined up at a sales center during pre-construction to buy a condo. And so I thought that was the beginning step of my journey to becoming eventually a property investor. Little did I know I was becoming a property collector. Because in 2009, when we moved to Edmonton, even though when I rented out the condo, it wasn't cash flowing, I just hung on to it because that was how I was trained. So with that said though, here's the thing. I think most of us, especially if you just started in the last year or 5 years even, I mean, we've been doing this actively and professionally for 13 years now. This is seriously the first time that we've experienced interest rate as high as this. Not as high as in the 80s. I mean, I was born in 82, and apparently that was the year that mortgage rates were 18, 19%. And nobody right now can even imagine that. So there are ways to go about continuing to build your portfolio despite what's happening in the world. And so what that means is this is really interesting because I did a talk a few days ago at a meetup to over 200 people. And this was one of the slides that I actually did up. So which REI strategies are good in 2023, do you think? I would like to have everybody's input. If you want to unmute yourselves or type it in the chat box, let us know which real estate investing strategies do you think are viable and good in 2023 right now, knowing what you know in the general economic environment. Don't be shy. Talk to us. You didn't come here for just, a presentation, right? This is an interactive panel. See, we got Burr. Okay, we're gonna say what strategies, John. What strategies are good? Service accommodations, I like that. Hey, Aaron, do you mind sharing why you said SA? Why did you say service accommodations?
Just well, short-term rentals, you can make a lot. I think you can make a lot more doing that than renting or holding for long-term.
Yeah.
Now, because I mean, rents are really high, and then people can't afford to stay at hotels either. So you get a better experience, I think.
That's very, very good perspective. Thank you. And I'm just going to quickly add to it. I actually do agree with you. Service accommodations is definitely one of the most popular strategies these days. At the same time, though, remember, service accommodations cover short-term rentals, midterm rentals, executive rentals, student rentals, rooming houses, all those, right? And so, yes, theoretically speaking, our main source of income with service accommodation being rent that we're charging are usually higher. At the same time, the added expenses usually are a little higher as well. In terms of demand, though, I will agree with you, because if you think about just 2 years ago during COVID lockdowns, when the restrictions got eased up a little bit, we all got the opportunity to travel slightly in 2020, 2021, and service accommodations or Airbnbs back then, the marketing platform, reported their highest earnings ever. Why? Because most people are doing staycations for that reason. Between interest rates going up, so households are getting pinched, yet they still want to do something. So I would agree with you based on that logic for sure. So thank you. Mitch said private lending, and Megan says RTL, love it. Private lending for sure. And I know Ryan has something he wants to share too.
Yeah, I mean, just to piggyback on the service accommodations, I think you made a really good point, Tim. Most people, when we say that, they think Airbnb, VRBO, certainly great platforms, and Gustavo does a great job talking about that in his service accommodations course. But the one that you mentioned, and I think it's often overlooked because it can be very good money depending on your market, is that corporate arbitrage. Right. I'm in Kitchener-Waterloo, and you look at that, you've got 2 universities, a college that you have visiting professors potentially. You have places like the Perimeter Institute, Google, Facebook, etc., where you have Silicon Valley people coming and visiting. Very lucrative. You just got to talk to their admin departments. They're often very friendly because I was trying to think. Emerging Markets is a book that I'm reading right now by David Lindell, and that's one thing he talks about is just kind of differentiating yourself and making those difficult calls, right? Because so many investors aren't going to make the calls. So the simple fact that you're doing that alone differentiates you, and they're more than welcome to speak to you, and they will pay fat checks to give these visiting executives and professors a comfortable place to live, right? Because these individuals are used to a certain standard of living. So if you're operating a fairly nice short service accommodation or short-term rental, it's ripe for the picking. And then really quick to private lending, definitely something that I've always done over the years to continue the momentum. I've always said no lazy money, even credit. Credit in effect is a form of other people's money. Right? Lines of credit, balance transfers. Brooke talks a lot about that in her creative financing courses. If you are borrowing at, even now, a line of credit, let's say 6.5%, 7%, and you can turn around and flip it at 15, 17%, I'll do that all day long. And it's a great way, if you're looking at, but again, due diligence, just like a property, thorough due diligence. If you're getting into these shorter term stuff, think about most opportunities, rentals that you're going to get into. You're going to have a 60 to 90 day closing, right? So I always try to stagger money coming back, or know that my terms are shorter, so that if you get a fish on the hook, you're going to have money coming back, or can call money back to get into those opportunities. Because with these rate hikes, the world is going to go on sale pretty soon. There are people that are going to be hurting. So.
1,000%. And just on that note, though, I always want to say, make sure that everybody is very clear about this, because sometimes, and this is why I feel like the government, the environment, the general public, the financially uneducated, they will always paint real estate investors or landlords a really, really ugly picture. And so they think that, all we're doing is preying on the weak. And that's not true at all. There's not an ounce of truth in that, because real educated and professional investors, we take advantage of the conditions and the situation of the economy. And at the end of the day, we make money by solving problems. We're solution-based and performance-based investors. It has nothing to do with people are hurting. People are hurting and they're looking for solutions. And if we are able to come up with a mutually beneficial win-win solution for them, great, everybody wins. Otherwise, we can basically just part ways. And so on that note, I would encourage, if you are on this journey to invest in real estate, turn off the news, stop reading the news, watching the news for the next couple of years, and be fully immersed to completely rewire your programs on how you view money, the world, the market, and just focus on hitting your own numbers. So with that said, I see Jeffrey's hand is up, so go ahead.
Thank you very much, Tim. And I just want to, because I'm teaching distressed property with Trusted Talent, I just want to use the strategies and also some of the process we are going to teach you in my class to see how we can adapt to this market. Because as an educated investor, we always need to know how to adapt the market. With the currently slowing down market, we often hear people are saying, yeah, for example, don't do fix and flip. It's very risky right now. Don't do BRRRR, because when you want to refinance the property, you often see the appraisal will not support the price you expected. So with that said, let's say some of the investing bottom disciplines we want to see. First thing first, in today's market, is it easier or is it harder to make money in the buy? Making money in the buy is often one of the most important rule we need to use in every single investment we are doing. So in today's market, is it easier or is it harder to make money in the buy? And as Ryan has also mentioned, we always make sure we have multiple exit strategies in every single deal. If you are flipping a property, you want to sell it as quick as possible, but with a slower market, maybe it will take a longer time. And if you cannot sell it within a very short period of time, can you convert it into a traditional long-term rental? Or as Ryan have done that, can you change it to an Airbnb or short-term rental service accommodation? So as long as you can still have positive cash flow, at least you can hold the property without any pressure. And another rule we want to use is that when we analyze the deal, the after repair value of the property is always determined by today's market. We don't speculate the market appreciation. If we can have any of that, that's simply just a bonus. But our investment decision is not based on that at all. And Another example I can think of, let's say we do a BRRRR analysis. We want to refinance when we finish the renovation, but with a higher interest rate. And if, as long as we can still have positive cash flow, can we budget in the beginning, let's refinance the property after a little bit longer time, maybe after a year or after two, just don't do it maybe within 3 months. You will tie up more money in the deal. So there are always different ways for investors to adapt the market. As long as you structure the property, the deal in the beginning properly, you can always find deals. That's all I can say. Giving you back, Tim.
Thanks, Jeffrey. And I see Brooke is going to come in and contribute as well. And I'm just going to take one quick second. I think the answer is starting to surface for everybody. And that's simply this. When you understand how to execute each and every strategies that are in your tool belt, every strategy is good and viable as long as you stick to the fundamentals. As long as you stick to the fundamentals. So on that note, I'm going to bring Brooke up quickly. Go ahead.
I'm adding quite a few notes after Jeffrey and Ryan spoke, and also Tim. One of the things I want to mention, yes, S&P follow the basics. Like Ryan said, do the homework off the market. So what can be viable in that market? S&P. In Ryan's market, for example, they're universities, they're high-tech companies. So always find a win-win in that market. And I get that we hear news because there's a lot of negative news at the same time. What I see is because people are not looking for the win-win situation. And sometimes people think they're taking advantage of. Well, at the same time, always think about win-win. Did I not finding a good win-win situation that everybody can get out of the deal? And second, I think based on the market, anticipate. So say, for example, refinancing is taking a very long time. Yes, so when you do your due diligence, calculate the holding costs. You might have to hold it for another 2 months, 3 months. So when you stress test your property these days, based on the market, add in another couple months of holding costs, for example. And third, because we're educated investors, it's always a hybrid. So we use several tools like service accommodation and BRRRR, because Ryan did put a little bit of money to improve the property. And at the same time, use creative financing. What can you do to reduce your carrying costs, to reduce your costs for BRRRR, for example? So as educated investors, stick to the fundamentals, always look for a win-win. And because we have all the tools, we can definitely use so many different strategies and get really creative. That's why we love it so much, because we're always solving problems. And I see that gets more people's hand up.
You've started a few things here, bro. Okay, before Ray and Ryan share, I want to put this up here just because we are going to be putting this up as a recording as well for those of you who could not make it today. And I know some of you may not be familiar with what we've been talking about as far as S&P goes. So here it is. It's what we always say, it's the professional investor's approach. And this approach really, really can be applied regardless of what investment tools and vehicles you choose to use. It all starts with a financial goal. And I understand we all have different money programs and upbringings. And sometimes it feels like saying things like, I love money out loud is really weird for some of us. I know it was really weird for me. At the same time, I had to work to reprogram, like many of us on a Trust Your Talent team, had to reprogram our own mindset on how we view money. Money is just a tool, like fire, like water, like hammer. You can use it to create great things, or you can destroy things with it. And so in terms of where we go with this is the fact that we believe that most of us, when we invest, there is a financial goal in mind. And if you're just investing kind of not just without a goal, you really, especially in this area, you are basically just collecting properties, and that may not be sustainable for you nor for your generations to come. And this is why we stress on the S&P process. So once you have a financial goal you would like to hit, then it's time to determine your strategies. And I'm going to even add sort of an intermediary level right now, is the fact that right now we're going to assume that everybody's leveraging real estate as our vehicle. I mean, at the same time, you can buy other business, you can do a startup, you can go into anything else, maybe even leveraging stocks and options and futures. However it is that you decide to do this, regardless, this approach works. So we always say you start with a financial goal, okay? And then that goal should be contributing to a picture that you have in mind. And that picture usually is, how is that going to impact your lifestyle? What are the problems you want to solve in your own life right now? I remember years ago, I heard this from Brooke, and then Brooke said, I learned it from my mom. If you don't care about money, money's not gonna care about you, basically. And you got to remember that. And so there's no shame in admitting that you want more money, you love money, because you can make it do great and greater things for you, for people in your life, and maybe even your community and the rest of the world at some point with it. And so when it comes to financial goals, make sure you're very clear about what you want to hit, and then you go into what we call the SMP process. And that way you have the right strategies, the right market, or even investment vehicle that you want to go into. And then in our case, because most of us are real estate investors or wanting to leverage real estate, property is the last thing we look at. Okay. And so for those of you who have never been exposed to Trust Your Talents training philosophy and what we see as the professional investor's approach, this is a very quick overview for you. And now I'm going to bring on Ray and then Ryan.
Thanks. Now, it's interesting how there's a lot of fear about what's going on right now in the market, and yet a lot of people out there, they love buying things on sale. People love buying things on sale, and yet they're scared of the interest rates. This is when we say, and time and time again, history has proven that most millionaires are made during recessions. It's a mindset shift. Why on earth would you be buying when everybody else is ramping up and bidding up prices? When people are greedy, be fearful. When people are fearful, be greedy. This is the right time. And it's that mindset shift that I know myself, my fellow trainers here at Trust Your Talent, just keep on harping on, keep on pushing forward. Because now, with that sort of mindset shift, we can see the world differently. We can see all the opportunities that uneducated investors are either too scared or do not know how to take advantage of. And look, this is, as an educated investor, we can actually leverage all the fear that the media puts out there to actually profit. We're going to leverage other people's marketing dollars so that we get ahead and help those people around us. So again, take what you see out there and then put on an investor's hat. Or if you don't know how to put on an investor's hat or to create one, get yourself trained. Because the uneducated investors out there are running scared. And do you know what happened to people who run scared and drop their assets? Well, they become sale assets, or as Jeffrey likes to call it in his course, distressed sellers. So why are we scared of high interest rates if we know how to calculate cash flow? Why are we scared that other people are going bankrupt when we are educated and we know they don't know what they're doing? So flip the switch, if you will. See the world through different lenses and see what could be instead of listening to the fear. All right, I'll pass it on to you there, Ryan.
Oh, Ryan, not able to hear you again.
Sorry, there we go. I was going to say tough act to follow. My goodness. I wanted to start though too, and I don't think it goes without saying, anybody that's seen her speak, Brooke, my God, like true powerhouse. Like when she was speaking, she's tiny, but she's mighty, and she has a lot of prolific things to say. She just spurred a lot of things in my mind as she was saying what she had to say. So definitely listen to her. So just going back to kind of pivoting, I did post a couple of pictures there in the chat for anybody that cares. It's not, it was just to kind of show the transformation that can take place with very little amount of money. You know, Facebook Marketplace, Craigslist, thrift shops, things like that. And Brooke mentioned, yes, I did have to inject a little bit of money. However, part of stress testing a property, we always teach, include maintenance, management, vacancy. So we already had a healthy contingency fund there. So yes, the negative cash flow that had came about due to the rising interest rate on our mortgage already accounted for maintenance, vacancy, and management. That was coming out every month for years. So we had a healthy slush fund there. So there really was no cash call or money out of pocket. Okay, and without going too deep, just some other little hacks that we sometimes talk about in the business fundamentals tutorial. Points. Investors love, I guess whether you want to call it gaming the system, but credit cards are a massive part of our journey. Apply for them all the time. Brooke talks about it in her course. I've probably got a stack about this big, and they've all got rewards of some point, of some sort. One of my faves right now is the corporate platinum Amex. Everybody likes to travel and see the world, I'm assuming. Show of hands. I know I do, right? We're going to Disney early next month, and decided for the first time that we're going to fly business class. We're going to be in a pod, and we did it all on points, right? Especially with the little guy. It's going to make him a little more comfortable. And so, yes, the money was there, however, we put all of those purchases on the card first, earn the points, then pay it off. Just a little hack for everyone.
Awesome, thank you. And I saw Andrew's hand go up. Very inspired. Go ahead.
Just a quick note, we were talking about fear earlier and their interest rates and the purchase prices. So one thing that really stuck with me was someone talking the other day about how the same people, the same uneducated people in the height of the market were saying that the prices are too high, I'm not going to buy. And the same people now are saying the interest rates are too high, I'm not going to buy. And so the way I summed it up the other day with a friend, we were talking about, he's a mortgage broker, and the idea that you marry your purchase price and you date your interest rate. So when you buy that property, you're locking in that price forever. However, with your interest rate, those fluctuate. We know that you can refinance when you pay down a little bit of that debt, or if you're getting creative with your financing. So it was that whole principle of you marry your purchase price and you date your interest rate. And now that prices are lower, I'd rather be marrying that lower purchase price while the interest rates are high and make that success for years to come from taking advantage of this situation. So that's just my 2 cents on that.
Absolutely. And I see Vince has his hand up. So before Vince shares, I'm just going to quickly interject quickly. And then we have a second question. Actually, we have 3 questions today, as I mentioned earlier. So what I really want to share here is along the same line as everybody else has. And lately, we've been really sharing this fact. If you want to take a good look at your hands right now, okay? Just take a look at your own hands, right? I'm going to say this. All thumbs are fingers, right? All thumbs are fingers. However, not all fingers are thumbs. So what does that mean? Because in this industry, what we've seen a lot is all investors are buyers. So this is why we still say you buy. It's okay to acquire new properties right now. You just got to leverage the right strategies to buy, because all investors are buyers fundamentally. However, not all buyers are investors. And so I'm even going to be as bold as saying this. If in the next 2 years, you don't come out of what's happening financially better off, you are financially uneducated, or you could use some more financial education. That's really what this is all about. At Trust Your Talent, I know we leverage real estate investing as our main vehicle to demonstrate the principles and the concept of how money works. At the end of the day, what we truly stand for is elevating people's financial education and the level of financial IQ, financial literacy. That's what this is really about. It has nothing to do with the vehicle that you choose to use. It just, we do happen to love real estate because of so many different factors, between leveraging, between control, between insurance and protections, and control above all else. Okay. So with that said, I'm gonna pass it back to, I know Vince wanted to share something earlier, so go ahead, Vince.
Yeah, I just wanted to add, because I always say this, that being an educated investor means that we understand how to run the numbers. And sometimes we do get discouraged. We might run a deal and the numbers don't make sense. And then the second one, numbers don't make sense. And the third one, the fifth one, the 10th one, numbers don't make sense. And you're like, what am I doing wrong here? However, the reality is we ran the numbers knowing that it doesn't work, whereas most uneducated investors would have just bought the first one for the sake of buying it. We just dodged 10 bullets. That's the reality. And to add on top of what everybody just shared as well, down the road, 5 years from now, people are going to look back at us and be like, well, you guys got lucky. You guys just bought it at the right time when the market was low. I mean, well, where were you guys? What were you guys doing at that time while we were preparing ourselves for all the opportunities that are literally presenting itself right now as it's happening, as we're speaking, and we're basically able to see the opportunities to take advantage of it. So I just wanted to throw that out there.
Love it, Vince. It's funny because even when Ray and I first started getting educated, and that was way back in 2010 now, and that's why 13 years. And we were like, we would come across other students, and we were in our 20s. There are other students in their 50s, and we're thinking, oh wow, like they're also taking the same kind of education. Why? And at the same time, some of them already, did the buy, rent, and pray. They were property collectors. They collected like anywhere between 2 to 10 properties, and we would just look at them and go, oh, you were lucky. We also had that idea. We also thought that. However, that's the funny thing, is the fact that there is no bad time to get into the market as long as you know how to get into it and protect yourselves. And so it's funny because I'm going to segue that into the second question. I'm going to open it up to the panel as well. The second question here, actually second and third to me feel very similar. Okay. First one is this the right time to enter the real estate investing market for a newbie? I thought 2023 was the year for me to start becoming an investor, and now I'm not so sure. And the second one is, what's the biggest advice you'd give to someone currently investing or wanting to start investing in real estate right now? So panel, you're up. Do I need to repeat a question? I'll do that again, okay? Is this the right time to enter the market for a newbie? I thought 2023 was the year for me to become an investor, and now I don't know. And the other one is, what's the biggest advice you would give to someone currently investing or wanting to start investing in real estate right now?
I'll start. So what's that famous saying? We buy real estate and wait, not wait to buy real estate. And I'd like to add another line to that: buying real estate correctly. There's lots of people out there that get swept up in the emotionality of it all, and they'll buy real estate because their uncle bought real estate. They'll buy real estate because their neighbor did. And it's less about being strategic and knowing our own goals, and more about keeping up with the Joneses and feeding our ego. And this is from Tim's talk on Wednesday. and leveraging Ryan's message earlier, we're leveraging real estate as a way to replace our income to feed freedom, a lifestyle based on freedom. And so when it's this whole situation of real estate is taking money out of my pocket so that I get to call myself a real estate investor, that's not professional real estate investing. That's somebody getting robbed by their own ego. And here at Trust Your Talent, we focus on non-emotional real estate investing because investors look at the numbers first. Investors make sure that there's cash flow and there's cushion and there's a plan B, C, D, E. Because when the markets change, and by the way, it's called a market cycle because it changes. It's not a market flatline. We know how to pivot. We've already thought about how to pivot. We've run the numbers on plan B and C, so we don't become motivated sellers. Again, as educated investors, we purchase assets, properties, land from motivated sellers, not become one. And that's the major difference. Whenever there's a market shift, we can always see what happens to people when the tide goes out. They're the ones with their pants down. Okay.
That analogy always makes me laugh because it paints quite a picture. I'm gonna go over to Ryan and Brooke next.
I love that analogy too. And it's funny. I mean, you're seeing a lot of candid conversations. There's a few of you on screen here. Mentees of mine know that I've said that more than a few times. I love that line, candid conversations. But there's a lot of those on social media right now. And some people that were even coaches out there, right? So, again, always do your due diligence on every decision you're making, including a potential institution that you're going to align with for your education. Is now the right time as a newbie? Just like anyone, as an educated newbie, now is the perfect time. The perfect time, right? You're absolutely doing the right thing by being here and starting your journey, making this day one, instead of saying, oh, one day I'll do it. Make this day one. Start acquiring the knowledge, put yourself in a position that differentiates you from 99.9% of other people out there, and put in the work, because yes, there are a lot of people that have seemingly disappeared or folded up shop right now because it is too difficult. So your competition is far less, especially depending on your strategy. Part of why I love multis, right? There is a lot more people bidding and frankly, even emotionality with single family homes, because you may be looking at it as a single family, as an investment property. Other individuals may walk through it, have that wow moment, and have that emotionality that I need to be here, and they're willing to overbid, right? And that's what does not make that viable for you. However, there are not as many people that are going to be walking through 20-unit apartment buildings, for example, and having that emotionality. The people that are doing that, actually, they're not even doing the walkthroughs. They have their power team members doing the walkthroughs. Let's be honest. Don't waste your time with that stuff. And then, it all comes down to the numbers, right? So now more than ever, education is crucial. And I think because of that, because all of you here have proven that you're committed to that, this is the perfect time.
Yeah. Thanks, Ryan. And I mean, I want to quickly share this before I bring up Brooke. I'm sure she's got something brilliant to say as always. And this is also why the second hard question. It's funny. This was actually, I'm literally recycling a talk that I did on Wednesday night. And yet these questions are so, in my opinion, they're very hard hitting. And frankly, I mean, I summed up these questions. However, these were the questions that were asked of me too. And Ray, when we were mentored by somebody else, when we were trained by somebody else. First one is, are you feeding your ego or your bank account when you're investing? And the second one here is, do you have the ability to stress test your own opportunities based on your own risk tolerance? I always highlight the last little bit there, your own risk tolerance, because me right here and Brooke, we have different levels of risk tolerance for many different reasons. So it's the same thing for everyone. And I think there are so many, and just like what Ryan kind of mentioned earlier, is that even though Trust Your Talent has only been around so far for 3 years, so happy. Ray and I have been in this industry for nearly 10 years now in terms of teaching and coaching, and I've been able to do this worldwide, very much like Steven here in the room too, is the fact that people come and go. We've seen different coaches in this industry come and go, and they got caught with their pants down, literally, in the last 12 months here. And so I really love the fact that at the very beginning, before we officially launched TYT, Trust Your Talent, back in 2020, I remember the entire team coming together in 2019. We had an initial meeting, and we all made a promise that we are all active investors ourselves, and we're going to remain active investors, because we believe that in order for us to share and continue to train and mentor, we also need to be in the trenches, in the markets, doing what you're doing, okay? And I know some of you are going, well, that means you're competing against the same opportunities. No, because once again, your own risk tolerance level is different, your access to resources is different, your level of knowledge, experience, and many, many other life skills are very different. What's a good deal for me may not be a good deal for you, and vice versa, okay? However, the whole idea is that we are actively walking the walk with you, alongside with you, so that we can really provide insight and perspectives that are relevant to you. And so pivoting back, going to Brooke.
Thank you. That actually makes me think of another point, but go back to the questions. Is it a good time to buy? Yes, there's always a reason to buy, and there's always a reason not to buy. People always say the best time to buy is yesterday. I think to some extent, people look at it as speculation because the price was lower yesterday. However, I look at it as, in hindsight, is always 2020. That's why you have a group of people with their experience. So with the education and mentoring, you're hoping that you're not going to make as many uneducated mistakes. Let's put it that way. So yes, it's always a good time to buy. We've talked about it even when we answered the previous questions. Yes, you always pivot. There's always different strategies. So in Chinese, actually, opportunity means crisis and opportunity at the same time. So whenever there's crisis, for sure, there are opportunities. And to new investors who are thinking about entering and thinking if it's a good time, I would say first educate yourself so you're not as afraid and thinking that there's no tools out there. There are. And I understand we have so many different courses, and you can see how we manage to use different strategies together. And I think besides hard strategies, always educate yourself to manage the fear. The fear will always be there just because we went through different stages in life, and we probably saw a little bit more because we started the journey slightly earlier. So yes, we went through more uncomfortable situations. However, everybody always managed the risk and the uncomfort level. So the uncomfort level we can tolerate right now might be slightly higher. Another thing I want to say about risk tolerance is that you constantly pivot, right? It's not just about now. So say, for example, Andrew is going to have a kid. Your risk tolerance is going to be different. Your life situation changes, your risk tolerance will be different. When you get married, you have another better half to take care of. So your risk tolerance will be also different. It depends on your life situation. And just one last thing I want to add is, yes, your network is your net worth. So especially during uncertain times, the support of the community is so important. I just learned something not too long ago. It's actually about money. However, it's called happy money. And he's Japanese, so he talks about Zen of money. So besides money, you have invisible asset as well. Your net worth. So say, for example, your friends. So if you have 52 friends, you can stay with one friend every week, even if you don't have a property. Or for investors, if you have different deals that you want to constantly find funds or your invisible asset to support. If you have 52 friends, you can basically find one deal per week and still make it work. So that's my 2 cents. I see Steven's hand is up. So I like Steven's point where 99% of the people always have excuses not to take action too. So pass it down to you, Steven.
Thank you, Brooke. Well, I want to tag along this. It's a good time to buy. Now, although it's not our main focus to bet on capital gain, we know that in general, though, real estate prices go up over time, right? Would you agree with that? Yes, yes. So most people would regret again and again, and they say, oh, I should have started this investing 5 years ago or 10 years ago. So let's say you don't invest right now. And now let's visualize this. Let's visualize that we fast forward the time, the clock to 5 years or 10 years later, to 2028 or 2033. Now look back in time. What have you done? Would you regret? Are you okay, or can you afford this non-action that you've done today, right now? Like, you will hit your head again and again. So my take is get educated right now and start investing. Now is the time. So thank you.
Thanks, Steven. That's awesome. And I think this is the thing. I am always out loud and proud about the fact whenever people ask me, what should I do next? And I'm completely biased, and I think I'm biased in a very positive way, which is get educated. I don't care if you're a newbie personally, and I'm very straightforward in case you haven't noticed. I don't care if you're brand new in real estate investing, or if you've been investing for 10, 20 years, or you've got 10, 18, 20, 100 properties under your belt. Having traveled around the world, and a lot of that was with Steven here, we've learned that we've met people that have hundreds of doors in their portfolio sometimes, and they are in the negatives. So they got to continue to feed into it. And so the question has always been, because we stand for financial education. When you have the financial education, you can create your own financial success. And for a lot of people, the quick and easy definitions are reaching financial independence or financial freedom. All that just means that you don't rely on anyone or anything else but your own ability to make money. So you don't ever have to worry about money. And that's what we ultimately stand for at Trust Your Talent. And so the funny thing is, it really has nothing to do with how many properties, and there's no ego in anything that we do. Earlier, when I share the fact that our cash flow shrank by 12 grand a month, it's the first time it's ever happened to us since we started 13 years ago. Could we have forecast that this day would happen and come so quickly? No, to be completely honest. At the same time, do we have the skills and the knowledge to flip that around? Yes, absolutely. Because we're going to start to leverage a few different strategies to increase our income. And like I said, maybe the poor performing properties will exit our portfolio, because ultimately we're running it like a business. And just like every business, our goal is to either maximize our profits or minimize our losses, or anywhere in between. At the same time, though, I also want to share this with everybody, because I understand that we have more current TYT students than brand new people. However, you might be watching this and you're brand new and you've never really talked to any of us at Trust Your Talent yet, and this is your first exposure, and that's totally okay. However, this is why we have set out a mission to create financial independence one person at a time. Because once you've got your foundation built, meaning you can actually pay for all your day-to-day bills from your portfolio, the rest is kind of play money. Because once you've reached that point, for most of us, your risk tolerance automatically kind of goes up a little bit. and you want to test out different strategies. You want to go into different markets. That's the part where it can fluctuate and you're not going to get hurt. That's the thing. We are here to protect you because we've learned to protect ourselves, and we just want to pass on that formula. Okay. And so I know Vince has been wanting to share with 5 months old in his arms. So let's go for it.
I'll do my best if she, hopefully she doesn't cry. However, I want to say, because, as investors and most of us in the room, you probably have a lot of friends or family asking, like, you guys invest, what should I invest in? What property or what location? Or, you're an investor. Should I do stocks? Should I do mutual funds? Should I look into bonds? And when people ask me, what should I invest in? My question to them is like, well, what do you know? Because I can give you an amazing opportunity to serve it on a silver platter for you, but if you don't know what to do with it, the opportunity is missed. If anything, you'll put yourself at risk. That's the thing. I could give you the perfect deal. You just got to put the deal together. No strings attached, nothing. Here it is. But if you don't know how to do it, you don't know how to do it. So it is a missed opportunity. And that's why that knowledge aspect, if the first thing that you should be investing in is yourself, so you know what you need to do in order to hit the goals that you're looking to hit. That's, at the end of the day, it starts with you.
Absolutely. Thanks, Vince. And so at this point, I want to quickly bring something back on the screen as well, because it's funny, hey? Almost 90 minutes already. It goes by so fast when you're having a fun and productive conversation like this. And we welcome you to keep coming back and joining us. New, experienced, current TYT, non-current TYT students, feel free to come and join us, because we really want to make this a platform for everybody to express their opinions, their values, their knowledge, their experiences, and everything that's happening. And so we have some upcoming events here. So I want to share with you, the seminars is open to the public, very much like the panel Q&A that we're on right now. Next Tuesday coming up, January 31st, we're going to go into how to stress test your own deal analysis. For some of you, unfortunately, this will be how to stress test your own deals right now, meaning properties that are in your portfolio. Because as professional investors, we always say we are performance-based investors. What that means is if it's not performing and hasn't performed in a long time, again, maybe it's time for you to think about freeing up that equity. It doesn't have to be a straight up sale. It could be. However, it may be time for you to actually think about how you can exit it. Because we always say, kind of like going back to what Ryan said earlier too, in the last few years, anybody with money could make some money because the market was going up, 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 up. Right now is when educated investors shine. The next few years, not just the next few months, the next few years is when educated investors will shine and increase and expand our market share. Okay. And so going back here is the fact that you might want to free up some capital to go into investing in deals that will perform to balance everything out. Okay. And then February 1st, next Wednesday, we're going to go into discussing what is private lending, how does it work, and more importantly, how to use it. And I noticed that, I think Liz just shared that in the chat box earlier. Knowledge is no longer power. Just knowing things, it doesn't work anymore. We live in the information age. Everybody's got, pretty much everybody's got a smartphone. Information is at our fingertips. It's so easy. However, that's also what trips most people. People either get into analysis paralysis because of the abundance of information, or they just focus on knowing and never applying it. And so we're going to go into discussing private lending, what is it, and how to use it in today's market. And then boot camps coming up. We have two in February 4th and February 25th, both on Saturdays. And we start at noon Eastern time on both days, noon Eastern time. And I'm going to cover a little bit more about what the bootcamp entails, simply because of the fact that most people that are part of the Trust Your Talent community, we all started with the bootcamp format to lay our foundation on how to leverage strategic real estate investing to build our income sources and wealth. And it's designed and geared to investors of all levels. So you can be a complete newbie, meaning you've never even bought a property. You might still be renting, and that's okay. You might still be living in your parents' house, and that's okay. Or if you've already been investing for the last 5, 10, 20 years. The reason why we say that's okay, it's simply because of the fact that, especially if you're on the spectrum where you've got experience, you've got a portfolio, you've got properties under your belt already, you might be thinking, oh, is that the right one for me to go to? Well, you're going to say yes, because I always say this. When you put a driving coach, by the way, who here has taken driving coaching before you got your license? I did years ago now, albeit. However, the point is, when you put a driving instructor in a car with a driver that's been driving for 1 year versus 20 years, guess what happens? One way or another, that driving instructor is going to point out the bad habits, wrong mindset that are deemed unsafe for the drivers. And funny thing is, people that have been driving for more than 20 years probably have way more bad and unsafe habits than people that have been driving for 1 year or not at all. And this is what coaching, training, education, and mentorships do for all of us. Okay. Last but not least, workshops. This is designed to be in person live. So we're going to be live in Toronto, Ontario on Saturday, March 18th or Sunday, March 19th. These are also one-day events that will run for up to 8 hours. It's very, very intense. However, we want to make sure that if you're at a more intermediate level, you have a different way of really allowing us to help you adjust and maybe change some of the bad and unsafe habits. That's the thing about investing, though. I do equate it to driving, because unsafe practices can get yourself killed, literally. And we want to make sure that that does not happen to you. And so with that said, just because most of us start out with boot camps, I'm going to share this with you. What is the boot camp all about? The first step for many, many of us, we're going to cover what we call hard skills and hard strategies. A lot of times there are more than this list to be covered depending on the room. At the same time, as Brooke mentioned also, it's not just about the hard strategies. I think the soft strategies are even more important at times. And because it's a one-day intensive, we are going to cover negotiations and asset and income protection, because these are the 6 subjects that we deem to be extremely important, regardless where you are in your investing journey right now, to at least cover and get you started. And you know, income properties, I always say, commercial properties, industrial properties, they all fall under income properties. Same thing with service accommodations. And this is why we want to make sure that your foundation is built very, very well before we go into any more specialized strategies. And with that said, there will be bonuses as well. Tailored coaching calls, because it's not one size fits all. It never should have been. So I don't understand why people just buy courses for nothing, for the sake of buying courses. Maybe, again, they're feeding into their ego rather than their bank accounts ultimately. So you get the tailored coaching calls with a strategy coach before and during and after the boot camp, okay? And that allows us to properly handhold you to make a plan that is relevant to your situation. Never compare your journey to the person next to you. You don't know what's happening in their lives. Honor your own, create your own. And you will get access to the bootcamp recording. So if you need to review it over and over again, you have the ability to do so. And then the bonus materials, including the slides and contract templates. Contract templates alone are worth literally thousands of dollars, because everybody's all heard of the phrase billable hours with lawyers. And we want to make sure that there are contracts that could literally be a broad stroke. We will help you on how to customize it later on. However, just so that you have that understanding and flexibility to start to utilize what you've learned after the bootcamp. And you're going to get access into our core courses. As mentioned earlier, business fundamentals are super, super important when you are becoming a professional investor, because you got to treat it as a business. We don't do buy, rent, and pray on anything, period. So goal setting, networking, business planning, business budgeting, and time management. Everybody's busy these days. However, the question is, are you productive? And we're going to give you the soft strategies and the hard strategies to complement on your journey. Typically speaking, this entire bootcamp is usually valued at nearly $7,000, given everything you're going to be getting. However, because you are at the panel, there is a special today for $39.97. So if you are not on this right now, you're watching the recording, or you're on this right now, you've never been to a boot camp yet, now is your time to register for the next boot camp. And one thing that I do need to add is, for those of you who have already been to boot camp, that means you get to take unlimited boot camp refreshers. You only pay once. We want to make sure that you stay close to the fire, because we understand that sometimes there are other factors, okay? At the same time, we want to make sure you stay close to the fire, stay close to the community, stay close to the conversation, so that you can start to make a difference in your own financial future. So with that said, I'm going to leave that up here for a little bit longer. And anybody else, especially from the panel, any concluding words you want to share, any aha moments that you're like, ah, that was really cool?
I just want to add to the bootcamp. If you're already a student, invite your friends, share the wealth, so everybody can hang out like we do right now.
I've always said, I do this and I share this with all those I care with, because, just envision, you have finally made something of yourself, and you want to, whatever your passions are, you want to travel the world to explore cultures, or just see cool things, or eat good food, or drink good wine, or whatever it might be, drive some mountain roads in my case. Think about how disappointing it would be if you then ask family members, ask friends, hey, going to Germany in September, you want to come? Wish I had the time, wish I had the money. That's what this is all about, right? What we've been approaching from so many different angles today: financial freedom, financial literacy, changing your life from a position of trading time for money, and opening that up, right? Having the ability to make those spur of the moment decisions, whether it's, like we jokingly say sometimes, bubble tea Wednesdays, or it is, hey, you know what? I have a whack of points on my credit card. Let's figure out where we want to go. Let's throw a dart at the map, or whatever it is, right? And so again, just to kind of go back to something I said earlier, make today day one. Truly make this the day that you decide, I'm going to take my life by the reins and make a difference. Not only for me, for my family, for my friends, for my future generations. I can tell you, I'm working on setting up my son's kids. That's what I'm thinking about. Generational wealth. And it's very possible.
That's awesome. Well, with that said, I believe I have just one more thing to share with everyone. And maybe many of you already know this and you're already on it. However, we are going to let you know how to stay in touch with us. And there's been some materials that I've created also, and it's called My Daily Dose with Tim. It's on YouTube. My goal is to be living in your head with my voice and my teaching, just like how I was taught. Because when I start to sound like a broken record, when what trust your talent is looking to pass down starts to sound like a broken record, we know we've done our job. So I want to thank everybody for participating today. The official portion of the panel today has been concluded, and we thank you for being here with us. And we look forward to seeing you at the next one, which is happening Saturday. It's always going to be a Saturday morning, 11 a.m. thing, Eastern time. It's going to be Saturday, February 18th. And a cool fact is many of us are going to be dialing in from the Walt Disney World Resort. So, all right. Well, thank you again. If you want to stick around for a few more minutes and you got just some questions that you might be thinking, ooh, I'm not quite sure if I wanted to ask that, now's your chance because you're here live. You get to do that. And I'm going to stop the recording now.